So I really want to talk to you today about how to get a business loan with no collateral. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as sublime as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's convo, I'm going to give you a step-by-step on how to get a business loan with no collateral. What is collateral really? Collateral is a security for the lender in the event that you default on the business loan and can repay it for any reason. And if your business is short on assets that could be pledged as security, finding a no collateral business loan may be your top priority, right? And fortunately, based on our research, it is possible to find business loans that do not require collateral as a condition for approval. Before applying for any of these loans, it's important to do your research so you know what to expect. So I'm going to give you 5 steps today that you need to follow methodically to get a business loan with no collateral. First, I want you to know your options. What are your options there? The first step in getting a business loan without collateral is to know which options are available to you. No collateral loans are offered by a variety of lenders, but loan terms and approval requirements can be very, very, very different. We have something called the SBA 7A loans. So the Small Business Administration guarantees loans for small business owners through its network of partner lenders. There are several SBA loan programs you might consider when you need working capital, with the 7A program being one of the most popular. The SBA 7A program does not require collateral for loans up to $25,000, which is really helpful if you only need to borrow a smaller amount of money anyway, right? For loans greater than $350,000, the SBA requires lenders to collateralize loans to the maximum extent possible up to the loan amount. If you don't have sufficient business assets to fully secure the loan, lenders can use personal real estate you own as collateral. Still, not having any collateral at all is not a barrier to getting a 7A loan if you meet the other requirements. Besides the 7A loans, you have the SBA disaster loans. So in addition to the 7A loans, the Small Business Administration offers disaster loans, disaster relief loans, that's the right word for it, disaster relief loans. Those are offered for businesses that experience losses associated with natural disasters as well as economic crisis. So for example, a business that's experienced losses due to a government mandate to shut down could apply for an economic injury loan. And similar to 7A loans, disaster loans under $25,000 do not require collateral. If you are borrowing more than that amount, collateral is expected. But again, the SBA will not deny you for a loan based on lack of collateral alone. That's why you really have to have a solid business loan application. So if you are, let's say, if you are applying for an SBA loan to purchase equipment, you may be expected to offer up to 10% of the purchase price in cash as a down payment. So step number 1, know your options. And so the options are SBA 7A loans, SBA disaster loans. We have other options: online and alternative small business loans. There is a wide constellation of online and alternative small business loans out there. First, you have business lines of credit. So this will let you spend up to a certain amount and then only pay interest on the amount you actually spend. You have equipment loans. Those help you pay not just for heavy equipment, but for any physical asset your business needs as part of its daily operations. You have invoice factoring loans, aka accounts receivable financing. Those pay you the amount of your outstanding invoices, so no more waiting on clients who are slow to pay up. The lender pays you the invoiced amount, of course, minus a fee, and then the lender will collect from your client so you can get back to your business and doing what you know how to do, right? Generate sales and make money. You also have merchant cash advances. Those will trade you a lump sum for a promised percentage of your future sales. You have peer-to-peer lending. This is a great option for a small business financing that does not require collateral. It is a relatively new platform that lets you borrow a certain amount of money from a group of investors, usually in an online-only format. And peer-to-peer lending platforms connect investors with small business owners who need loans. Here I'm speaking about Street Shares, Lendio, Lending Point, and the like. So with P2P lending, investors pool money together to fund the loan, and owners pay it back the same as any other loan, with interest, of course. And these loans are unsecured, meaning there is no collateral needed. And then you have term loans. Those can get you a lump cash sum within 24 hours, with the trade-off being high interest rates. And you have unsecured business loans. Those are loans that do not require collateral. Most business credit cards and lines of credit are unsecured loans. And then you have working capital loans. Those give you the funds to pay for daily operations, pay employees, and deal with temporary drops in profit. And most of those types of small business financing, the one thing you need to be aware is that they do not require collateral. For example, let me give you an example. If you take invoice financing, you are actually leveraging your outstanding invoices to borrow money. With a merchant cash advance, you are borrowing against the value of your future credit cards receipts. And in the case of equipment financing, the equipment you are buying or leasing serves as collateral for the loan, so you don't have to post any collateral yourself. The asset itself is used as collateral for the loan. Step number 2, I want you to pay attention to the lender's requirements. If your goal is to get a business loan with no collateral, after knowing your options, you really have to understand the lender's requirements, because those requirements, guess what? They vary. They vary from lender to lender. So if you are afraid of getting rejected on your business loan application, you need to meet what I'm going to show you, the 6 requirements that I'm going to show you right now, so you can boost your odds of getting approved. First, we have credit. So when a small business owner requests funding, lenders almost always check 2 things. They check the owner's personal credit and the business's credit. So having a good personal credit score is essential. Building great credit for the business itself is also very useful when trying to get a good business loan. So those are things you have to think about. You have to think about the duality here, the business credit score and the personal credit score. You also have the second criterion is the cash flow and income. So lenders will look at the debt to income ratio, the DTI of a business when assessing its risk. So the higher a business's cash flow and income, the better the chances it has of getting a loan. And what they do is they kind of look at 3 financial statements to check the DTI and the income. So you have the statement of cash flow, the income statement, and the balance sheet. Because on the balance sheet, you can see a company's assets and liabilities. And on the statement of cash flow, you can see the cash flow from operating activities, the cash flows from investing activities, and the cash flows from financing activities. And on the statement of income, also called a P&L, the profit and loss statement, you can see the income and the expenses. The third criterion that lenders pay attention to is the age of the business. So new businesses often have difficulty getting funding because most lenders only lend to businesses with a track record of at least 2 years. Okay. And the current amount of debt that the company has. So the other part of the debt to income ratio is debt, right? So businesses and borrowers with too much debt will have difficulty getting new loans. So I'm just trying to help you understand the lender's requirements so you can actually maybe fix some issues in your file before even applying. And in some cases, you might have to post collateral. So lenders view debt backed by things of value as less risky. So collateral-based loans can be easier to get and have lower interest rates. And also the industry. So if you're trying to get a loan, a business loan with no collateral, it's better to be in a good, quote unquote, good industry. Because during the loan approval process, lenders will evaluate the risk of your type of business. Some industries are easier to get loans than in others. It's just the way things work. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to get a business loan with no collateral. So, step number 1, know your options. Step number 2, understand lenders' requirements. Step number 3, I want you to prepare a business plan. A business plan, if you have no knack for writing business content, I'll just say, listen, you want to outsource the task. You can go on sites such as Fiverr, Upwork, or Freelancer to find a business plan writer, or you can even Google somebody locally and hire someone locally. You can even use business plan software to do it yourself, or to have someone in your team do it. You have software tools such as LivePlan, BizPlan, and InLoop that can help you tremendously have a great business plan. You got to have a business plan because that's your way to actually impress the lender. If you're asking for a business loan without collateral, you want to show the lender that your business is solid. And a strong business plan for a loan application will include the following elements. We're showing on the screen. You have the cover page and table of contents, the executive summary, the company description, the market plan and analysis, the organization and management. This is very important. You need to speak about the leadership of the company. If you are a solopreneur, you want to, in other words, if this is a one-person business, you need to incorporate in the business plan a copy of your resume or a short bio. All right. And in the business plan, you also want to talk about the service or products, marketing and sales strategies, financial analysis, and funding request. Funding request is very important. You really want to explain to the lender how you'll be using the money. Okay, this is very important. And so in the business plan, once you have those elements, you need to follow a certain strategy. You want to outline the opportunity. You want to outline why they should lend to you. What kind of opportunity you are pursuing. And you need to show how you will execute. And you will execute through your marketing and sales plan, your operations, and the milestones and metrics that you're going to follow to actually execute. You also need to detail your financial plan. I'm speaking here about your forecast thing. You need to forecast things like revenue, direct cost, personnel expenses, and other expenses like rent, utilities, marketing costs, and any other regular expenses. You need to speak about financing and statements, right? The projected profit and loss statements, the projected balance sheets, and the projected cash flow. And please do not forget the executive summary, because the executive summary is really the first section of your business plan. And but we do recommend that you tackle it last. It's basically an introduction to your company that summarizes the main points of your plan. So you want to keep it to just 1 or 2 pages and be as clear and concise as possible. Step number 4, folks. I want you to check and double check and triple check your business's financials. Very important. You want to know if you qualify. And that's the bottom line here. Some types of no collateral small business financing may be more difficult to qualify for than others. With an SBA 7A loan, for instance, you must have at least 2 years of operating history under your belt, meet the SBA's definition of an eligible small business, and have the minimum credit score and revenues SBA lenders are looking for. The SBA also requires that you exhaust all other borrowing options before applying for a 7A loan. With online and alternative lenders, on the other hand, the requirements may be more fluid. For example, a lower credit score may not be an obstacle to getting a merchant cash advance or invoice financing. And it may be easier to get startup loans from online or alternative lenders that only require 6 months of operating history. So the other thing you need to do is that you need to evaluate your business and its overall financial position. You need to double check your business financials. This means what? It means that you need to update your balance sheet. You need to create key financial documents such as P&L and cash flow statements. And you need to review your business expenses and overall cash flow. So the purpose here is twofold. You need to determine your credit worthiness for a loan and to evaluate your ability to pay it back. Because failing to repay a loan can damage your credit score both at the personal level and at the business level, which will make it ultimately more difficult to obtain any type of financing in the future. Some types of no collateral loans, such as merchant cash advances or invoice financing arrangements, use a factor rate instead of an interest rate to determine the cost of borrowing. And depending on the financing terms and how quickly it's repaid, the factor rate can easily translate to a 2 or 3 digit effective APR. So one thing I want to say here is that you have to actually in trying to build your overall financial situation, you need to check your personal and business credit scores as well, and make sure there are no errors, there are no mistakes, and if there are, you need to contact the credit reporting agencies, the credit bureaus, Equifax, Experian, and TransUnion, and DNB on the business side to make sure they fix whatever issues that you believe is erroneous. Okay, so this is very important. Step number 5, folks. I want you to be mindful of lenders' potential demands. If you're looking for a business loan with no collateral, be prepared to actually be on the receiving side of some unique demands depending on the lender. Be prepared, for example, for a personal guarantee or UCC lien instead. So if you're not posting any collateral, the lender might again try to lower their risks of default, your risk of default, by asking for a UCC lien instead. So while you may be able to get a small business loan without having to offer collateral, that doesn't mean the lender won't ask for other conditions. Specifically, what we have seen in our research is that lenders may ask a borrower to sign a personal guarantee or agree to something called a Uniform Commercial Code UCC lien. So a personal guarantee is what it sounds like. It's an agreement that you will personally repay the debt taken on by your business. Personal guarantees are often a requirement for no collateral loans and small business credit cards. As the lender has no collateral it can attach if you don't pay. The guarantee gives the lender leeway to sue you personally to collect an unpaid debt. And a Uniform Commercial Code lien is a little different. A UCC lien is a little different. It's essentially a blanket lien that allows a lender to attach any or all of your business assets in the event that you default on a loan. So even though you didn't put up any collateral on the table to get the loan, a UCC lien will give the lender a backdoor option for attaching assets if you fail to pay. So it's all about risk management, right? They're just trying to cover their ass too. Here, everybody's just trying to cover their butts, really, if you think about it. It's all about making sure that you are managing risk. And please consider the terms carefully before signing. If you have applied for a small business loan without collateral and have been approved, the final step is understanding the loan terms and conditions. So what I want to say here is that when reviewing the loan agreements, pay attention to the interest rate and APR. This is very important. And when we speak about APR, we are referring to the annual percentage rate, right? So we want to also have a conversation about the payment schedule. You want to pay attention to the loan term also. And what I want to say, you also need to know how long it will take you to pay the loan off and what your total cost of borrowing adds up to when the interest and fees are factored in. So it's not just about interest only. You also have to think about all the other fees, the origination fees and all the prepayment penalty fees, all those fees. Okay, speaking of fees, check to see which fees you are being charged. For instance, you have to, do you have other fees other than origination fee and prepayment penalty? If your cash flow allows you to pay off the loan early, you don't want to pay a penalty to do it, right? So this is something to think about. And finally, I want you to consider whether a personal guarantee or UCC lien is required as part of your borrowing arrangement. So folks, the takeaway here is that it is definitely possible to find unsecured business loans through the Small Business Administration and online lenders. No collateral doesn't mean that you will not be required to assume some level of personal financial responsibility for a business debt. And peer-to-peer lending is another reason for pursuing business loans with no collateral requirements. And one thing we've also seen in our research is that lenders may charge higher fees or interest rates for no collateral business loans. So the recap here, to get a business loan with no collateral, you want to know your options. You want to understand lenders' requirements. You want to prepare a business plan. You want to double check your business financials. And you need to be mindful of lenders' potential demands. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.